India is in a very, very, very powerful position structurally to solve this problem of financial exclusion. Internet is like the new electricity. Across the world, there's never been, something like Geo in any country, which is going to happen over the next 10 years. We believe companies like an Amazon, Uber, Apple, Google, all of these guys, by the way, are going to get into financial services and start distributing financial services. The address that you have on Zomato is probably more accurate than the address that you have on your PAN card or Aadhaar card.
Welcome back, listeners, to Economically Yours. Today we have with us Mr. Mikhil Innani, someone who's had a very diversified portfolio with respect to experiences and his work profile. He's currently the CEO, co-founder, MD at Apollo Finvest, and previously he's worked with Hotstar, Disney Hotstar, and he's also co-founded one of the biggest, medical delivery platforms today, which is Pharma. So, I do not want to speak much about yourself, Nikhil, right now because it's a very diversified portfolio, as I mentioned, with respect to experiences. So I'll just hand it over to you. Welcome to Economically Yours. I'm delighted to host you today. Can we just begin with, you walking us through your background, your journey, and your experiences?
Yeah, absolutely. Firstly, delighted to be here and, to tell you a little bit about myself. I completed my master's from Carnegie University in about 2000, 11 or so. And really then for the last, 10 plus years, I've had, the lucky fortune of, building digital companies in India. And, during, I guess, one of the golden eras for building digital companies in India. So I started off my career by being one of the very, very early team members at a company called, Coupon Dunia, basically, right? I headed product, over there, and that was my very, very first stint with an early stage company. Post that, I got to start my own company by the name of Pharma. Of course, Pharma is a very special company to me because, we started where I was one of the co-founders, and most importantly, like employee number, I was employee number 4 at Coupon Dunia, and employee number 5, 6, 7, and 8 joined us day zero at Farm Easy, and that made our journey that much more special and much more faster for us to go from 0 to 100 very, very quickly. Of course, that company has grown leaps and bounds today. I'm proud to say it's one of the massive contributors to affordable healthcare in the country. I got an opportunity to exit once we raised the Series B round there, and I took that opportunity. I went on to join Hotstar during its very, very early days again. I was within the first 10 team members in the technical product team there. We built out the technology from scratch. There I got a chance to not only build the tech, but also build the team right up, from the ground zero, and had a phenomenal experience. Like we went from 7 million to 350 million monthly active users, which was essentially more than almost 70% of the smartphone market, essentially in India, right? Which was a great, experience over there. We set many, many Guinness World Records actually over there in terms of live users on a concurrent stream. So it was a phenomenal experience being part of that team and getting to experience all of those things and building a lot of those things over there. But of course, I had a very fairy tale ending with, of course, the Mickey Mouse company Disney coming in and acquiring us. Um, and really, after that, I felt like my batteries were recharged as well. I was ready to go to my next company and startup, and that's where Apollo basically happened. Where Apollo Finvest is today, of course, a public listed NBFC. So we're listed on the Bombay Stock Exchange. The goal in the company quite clearly is to basically solve for financial inclusion. With that in mind, what we have basically created is a platform which provides technology and capital to any company which wants to start lending, right, and start digital lending in a matter of like 7 to 10 days, really. And over the last 5 years, we've had the fortune of working with 50 plus really amazing founders and got to experience many, many different digital products. And yeah, that's been my journey so far.
Great, great, Mikhil. It's wonderful to walk through your journey. Before I deep dive into what Apollo does and talk about the AWS of lending, that's how you all market it, right? I want to understand that your jump from industry to industry has been very diverse with respect to, like, say, from a pharma industry to something like a Disney and a Hotstar, which is in the commercial space, right? Uh, and this has been throughout. So, what was this intentional or was this luck by chance?
So I'll tell you, like, essentially, like, the thread which ties, everything that I've done together is, I would say, technology, right? Like, so I'm somebody who is genuinely just passionate about technology. I've been like this since, I was very, very young. I remember basically, you know, I remember when the first iPhone launched, right? Like, I had been marketing it at my house for like a year before it launched, preparing everybody in the family that, when it comes, basically, I'm definitely going to buy it. So you guys, better be ready because, I won't let, I won't basically stop shouting and screaming until, when it launches and it's in my hand. And I was very fortunate that, because of my persistence, my mom actually ended up buying it for me when it did come to India. But yeah, that's been the common thread, right? So what I essentially try to do is, every time I find basically an opportunity to use technology to basically, create something more accessible, that's what I try to do, right? Like, so as an example, with obviously something like a Farm Easy, I think, there was a clear opportunity to, bring in a lot of integration from a supply chain perspective to build systems to drive efficiencies at scale and really use economies of scale over there by using technology to basically create this whole aspect of affordable healthcare, right? Obviously with with Hotstar, one thing was very, very clear that Geo had launched, right? And to me, like, that's something which has really changed the game for internet companies in India, right? And obviously, I think that was like the leading vector which got me very, very interested in any kind of video streaming, because I genuinely felt like at that point in time, this is a huge environment change, where essentially if you build something in the video world, given that the data is so readily available and literally internet goes where roads don't go in India, you can actually end up building a very, very powerful company over there, right? And again, that's how I ended up basically building something like a Hotstar. And with Apollo, basically, I think there were two vectors which got me interested in this space, right? Essentially, I think a bunch of factors, right? So I would say one is when I was building Farm Easy, we realized that even though our retailers are so profitable, right? Literally, like, they were earning 2 to 3 lakh rupees profit a month as compared to, some of the standard, chemists out there who earn like 20, 30,000 rupees a month. They were struggling to get working capital loans from traditional banks. You combine this with my experience, at Hotstar, where even though we had 350 million monthly active users, like only 1 million of them were paying subscribers, not because, they didn't want to pay, but because they didn't have any instrument to pay us, right? So there was a huge gap when it came to basically, financial products basically being accessible in India. And I think basically, a lot of things have combined to make, now the perfect time to build something like an Apollo, which is namely like Geo, obviously
Hmm.
Aadhaar, and then UPI, right? These three things
Hmm.
combining has made like digital lending into, not a pipe dream anymore, but, not only the present, but definitely, the majority future, which I see in terms of, financial services overall. So that's how I've always tried to kind of, go about this journey where whatever space I find interesting, I try to find, why now is the time to basically attack it
Hmm.
technology, and then, do my best to, honor it for at least a period of 6 to 8 months where I'm just a student. I try to learn, like it's almost like doing a very fast PhD in that space in 6 to 9 months, and then, really pick it up from there basis of whatever insights I learn.
Right. So, okay, you mentioned that the caveat that, sorry, not the caveat, the gap that you all were trying to fill was the financial lending space, right? When it comes to loans and everything. AWS is so and Apollo Finvest, you're marketing as the AWS of lending, right? So I want to ask you one thing. I know Apollo Finvest is a fintech platform, right? I mean, fintech is the growing space right now. But when I talk about Apollo Finvest, how do you see it first? First, is it a finance company first or a tech company first?
Oh, we're definitely a tech company first, and the reason is simple. I'm not a banker. I don't pretend to be one.
Mhm.
There are people who know banking, I would say, 1,000 times better than me, right? Like, but I feel like our strength and the DNA of the company really is that of a technology company, and this is why we've actually gone about and built like the
Mhm.
AWS of digital lending, right? So I'll tell you the thought process also, right? When this problem is there, right, in India, where like 90% of India doesn't have access to formal credit, there are two options that I had at that point in time, right? One is obviously you can just start a digital lending company where I start lending to these people all directly, right? But that's where basically we thought a little bit differently, where I try to think, what are our strengths, right? Our strengths are really building scalable platforms, right? And that's why what we ended up building was essentially a platform which is powering fintechs, right? To basically lend to their audience, right? And their audience could be merchants, their audience could be end customers, right? Um, and what we truly believed is that, these fintechs have a lot more data about their end customers, right, than us. They have already acquired these customers. And, because of this, essentially, when you think about, financial inclusion as well, right? Like when you go deeper and understand why is there no
Yeah.
financial inclusion in India, actually, there are only two problems, right? Problem number one is the cost of customer acquisition is too high, right?
Hmm.
Essentially, uh, because most of these traditional lenders, right, they have branches and or they have physical ways of approaching customers, which ends up being like anywhere the cost ends up being like 1,000 to 2,000 rupees to acquire a customer, and then the cost of processing a loan, right, is anywhere between
Hmm.
2,000 to 3,000 rupees again, because it's a lot of the stuff is manual. Uh, and this is the reason why, by the way, most traditional lenders don't give out loans of like 20, 30, 40,000 rupees, because the math doesn't make sense for them. At the same point in time, the reality is most of India actually needs very small loans for a small duration of time, right?
Hmm.
Because they can't actually afford to pay larger EMIs, right?
Yeah.
So you have to actually do this in a sachet size to make it affordable for the end customer and truly cater to them. And that's where, if you build, a highly scalable platform like Apollo, where you work with a lot of fintechs, that essentially make sure that your cost of customer acquisition becomes zero, right?
Yeah.
Point number two is basically cost of processing, right? Now, if you process these loans digitally and you do this at scale, ultimately economies of scale kick in and your cost of processing each loan goes on reducing and trends towards zero, right?
Hmm.
So in this basically way, you can actually solve this problem, in a very, very clean fashion. And our thought process really with Apollo is, and one of the big reasons why it's listed is because we want to create, we're very clear about this, that one company cannot solve financial inclusion in the country, right? This is a government level problem, right? But what we hope to, do and really create an example of is that, with our numbers, with our profitability, with, our success, we want a lot of people to, copy what we are doing, or, take this example. And, there should be hundreds of Apollo Finvests out there, so that we can all attack this problem of financial inclusion, because the market is massive, right? It's 900 million people. So
Yeah.
opportunity is huge. The goal really is to create a beacon and an example of this model working at scale, so that hundreds of other companies come in and solve this problem together, so that probably 20 to 30 years from now, right, we are not never in this situation of being uh being basically a country which has 90% of the people excluded from basic financial services.
Got it, got it. So discussing about the digital lending space that's there in India right now, I know that one is the cost of processing and transaction that we discussed, which has come down considerably in today's time and age today. But apart from that, what do you think is one of is are the challenges that India is facing today when it comes to the digital lending space across, and how many gaps are there today, and how much progress have we done?
Personally, if you ask me, I think India is in a very, very, very powerful position structurally to solve this problem of financial exclusion, right? I think the raw material which India has is extremely unique, primarily because there is, I would say, again, these three vectors, right? I don't like, across the world, there's never been, something like Geo in any country, right? Where basically, to me, internet is like the new electricity, right? It's basically like, very, very fundamental. So, the speed at which it's got people online is phenomenal, right? I think, the Amani family basically deserves all kind of credit for this, because I think they've changed, they would be known to change, I think, uh, the trajectory of India overall, right? With what they've done. That's point number one. I think another person who basically has played a pivotal role in, basically the new India that we see is Mr. Nandan Nilekani, because both UPI and, basically Aadhaar, right, is something, which is his brainchild, and he's nurtured it beautifully well. So it's not even about thinking of stuff, right? It's about execution. So to me, UPI and Aadhaar again are two fundamental vectors which have come about, right? So to me, again, the raw material, to basically create a complete digital financial services experience in India is there, right? And that's what you're basically seeing. I think, what basically, what is basically the part which is missing is essentially, I believe that a lot more larger companies, right, who already have customers, right, which is our big thesis, by the way, which is going to happen over the next 10 years. We believe companies like an Amazon, Uber, Apple, Google, all of these guys, by the way, are going to get into financial services and start distributing financial services, right? And to me, that will be game changing, right? Because these are the people who already have 300, 400 million monthly, active users, or they have these, subscribers to their platforms, right? And when they start distributing financial services at scale, that's where you will basically kill the problem of financial inclusion very, very quickly. I think what has happened so far is really FinTech, it's like the baby steps. I think FinTech in India is like you know, is like a baby who's like 2 years old, right? Even though we've been doing this now for like 5, 6 years, I think in real human years, it's like 2 or 3 years of age, right? I think over the next 10 years, you're going to see this child go into becoming a teenager. And that's where I think it's going to be very special, because I really believe that by 2030, right, majority of the loans that will be processed across India will be digital, right? Which itself is going to bring down the costs of processing significantly and ultimately benefit the end customer in a huge way.
Right. Very interestingly, you mentioned that these tech giants, will come into the financial sector space, and the financial inclusion will basically grow exponentially. Apple recently introduced a high yield savings account in collaboration with Goldman, and do you think that this is one of the first steps towards that financial inclusion space that you're discussing? Because Apple has rightly put itself into this hyper competitive digital banking landscape now. So, will this grow into a financial services infrastructure and lessen its reliance on third parties as well, as we, transact into this particular trajectory?
My personal bet, I feel, is that essentially what's going to end up happening, right, is that a lot of smart banks, are going to end up becoming pure infrastructure players, right? They will stop having consumer presence the way they are today. The reality is, today's world, right? Every bank wants to become HDFC, right? But the reality is there's only one HDFC, right? Similarly, in consumer lending, everybody wants to become Bajaj Finserv, but there's only one Bajaj Finserv. I think a lot of people are going to start realizing that their business models don't make sense in the new world, and it's better for them to become pure, licensed infrastructure players who partner with people like an Apple, who basically can build significantly superior customer experiences. And at the most important thing, they have a very, very high trust score with customers, right? Ultimately, why is Apple able to do all of these things? Because they have, customers trust Apple, right? And that's the most
Yeah.
important thing in financial services, right? Who do you trust, right?
Yeah.
I think why I believe that, these large companies are going to be the ones basically changing the landscape is because they ultimately own trust, right? If the customer trusts you, they will transact via you. They will, they will believe that you will create a superior user experience, right? All these, any customer you ask, right? If you ask them, whose app or product he would want to use, an HDFC or a Apple, I think everybody would say Apple, right? Because they're just known to deliver really great user experiences. but banks are not, right? So I think
Hmm.
it's going to be a situation where the user facing essentially interface is going to completely change. And initially, it is possible that all of these large players end up working with traditional players who end up becoming pure infrastructure players, like a Goldman has done in the US. But it'll be interesting to see what ends up happening, maybe 5 years down the line, because a lot of these companies, I think, have the resources and the financial services, financial ability to basically set up their own licensed entities too, right? So I think it really is going to be a question of build versus buy, frankly, right? Because at some point in time, companies like Apple will think about it that at this kind of scale, does it make sense for me to do this completely on my own, right? And history tells us that maybe not initially, but over the next 20 years, you can't rule that out, right?
Hmm.
Because we've seen what Apple does, or good companies do across the board, right? Even Amazon, right? Like, initially they started as a marketplace. Today, they have their own pretty much, you could say, uh, cloud tail, things like this, right? Which are, more or less part of Amazon itself, who are selling on Amazon's platform itself, right? Again, because, you want to eat as much margin as possible, right? So, you can't rule that out, but it's a question of time, right? It
Yeah.
buys people time, frankly, all these traditional lenders, to think in a world where, in the next 10, 20 years, when large companies end up becoming financial services licensed players, where do you exist, right? What is your competitive advantage, right? And I think that's a real question which every CEO should ask
Hmm.
themselves.
Mm. And I think to draw another, just an extension of what you said, I think neobanks are also coming up. So that will be another leg altogether with respect to the banking industry that's booming in India. But very interestingly, you mentioned about owning trust. And when we talk about what Apollo Finvest does, right, in the space of lending and digital lending, one thing that these traditional bankers look at is the credit score that plays a very big role for them when it comes to dispersing of loans. And I think credit worthiness is one area that Apollo Finvest is solving today. So could you throw some light on that as well?
No, absolutely, right? See, fundamentally, like, I'll tell you, like, to me, like, the most simplest example, right, is that a traditional bank, right, when they do your KYC, right, is they usually check, where is it that you live, right? And they check your Aadhaar card, PAN card, or they look at your passport or something like that, right? The reality is probably a Zomato can, the address that you have on Zomato is probably more accurate than the address that you have on your PAN card or Aadhaar card, right? Because where you order food is actually where you live, right? Maybe where you have your driver's license or PAN card is where you used to live at some point in time. So to me, I think, the world is very different today, right? I think a lot of the thinking behind, the underwriting which is happening in banks is honestly in a world where, which is 25 years, 30 years purana, right? So to me, I think, that's why I believe, right, all of these new age companies, they have so many data points about these customers, right? Including the location of the customer, where they're ordering food, when they're placing an order, or, trying to take a loan, they have access to the phone's, location services. They come to know, as an example, is this customer, a trusted customer? Like, who are the friends of this customer, as an example? Who are the other customers who are living close to them, as an example, and who have also ordered, on our platform? What is the frequency at which this person is ordering? Does he use cash on delivery? Does he use, online payments? If he's using online payments, what is the credit card he's using? What's the kind of score that you require to use that credit card? What's the phone he's using? What's the cost of this phone? What are the kind of people who are using this phone? So you get so many data points, right, about this customer, that, the way to underwrite, if you're looking at only credit score right now, I think it's like almost like fighting with one hand behind your back, right? I think it's outright being stuck in the prehistoric world. I think you have to really think hard, and really be like, step into the new world and try to understand that, how would you evaluate the credit score of a customer given all of these data points, you have access to, right? So I think fundamentally, to be honest, like, what we do, right, is we have a classification algorithm, right, which works very simply put, where, we take all of these data points, and it basically just ends up telling us, what's the probability of this person basically, defaulting versus not defaulting, right? So it's a high risk versus low risk. And the way to basically build a classification algorithm also is that the more data that you get, the more you're able to build an accurate classification algorithm, right? So for us, because we've been doing this over 5 years, and it puts us in a very unique position because we are one of the few players out there which only does exclusively digital lending in a wide variety of spectrum, right? Like we do MSME lending, we do retail lending, we do, EMI, we do EDI, we do consumer loans. Every possible loan under the sun is something that we do. So we have a wide variety of data across India. So as we kind of grow, right, this data becomes more and more stronger, more and more statistically significant for us to be able to come up with models which are actually very, very reliable, right? So I believe personally, at least if you're looking at just credit score, I at least don't feel like it's a very real plan to basically have. It's something, again, you know, I think, and frankly, like the way I tell my team also, right? If you're telling me you're going to underwrite using a credit score, then I don't need any of you guys. I'll just follow Bajaj Finserv's model, which is, anybody above 720 score on CIBIL, just lend to them. And the whole world knows their algorithm, right? So to me, again, like, those things are not real moats, essentially. You're not a tech company if you're doing these things. It's a very, very poor mechanism to underwrite in today's day and age.
Right. But Mikhil, how do you tap the unorganized and traditional sectors of this market in India?
I think, basically what ends up happening is the beautiful thing today, right, is people spend a lot of their time online, regardless of, what their background is. Like, one of the things I always encourage people to see is that, go and see what your watchman is doing, most of the day. He'll be on a smartphone, right? So it actually doesn't matter, what background we're in. And that's where I say, right, like, basically things like Geo have changed the game, right? Like, in a world which is like 7 years ago, right, I couldn't say this, right? Because probably 7 years ago, your watchman would not even have a smartphone. But today, everybody has such a massive digital footprint that, data is ever present, right? So there are a lot of proxies available, essentially to understand whatever data that is you want to dig about this person. They'll have some, online crumbs of data which are available for you to basically use that data and use it as a proxy to, understand what you want to understand about this particular user.
Right. So, you mentioned that all kinds of loan, you all look at under that's available today, which, kind of brings me to the question that would ultimately trickle down to the fact that you also interact with a lot of entrepreneurs in India today. I mean, at least you get to know many. Having said that, entrepreneurship today in India, is it becoming a need or a trend? Because every other day we're seeing some or the other startup that's gaining the hype today. I'm not sure if that's a required startup or that's just out of the hype that's been created. So what's your take on that?
I think very honestly, right, like the way I think about it is, ultimately this, it doesn't matter. I'll tell you why. Because, entrepreneurship is one of the most difficult things you can ever do, right? Like I always tell people that if you think this is the way to make money, I can tell you 10,000 more ways, smarter ways to probably make more money initially, and it to be like 100 times easier, right? Because to me, like I always give an example, like if somebody asks me, like, how difficult is entrepreneurship, I tell them like it's like eating glass and shitting diamonds, right? Like that's what it is. It is that hardcore because it's become very easy to nowadays start a company, right? It's very difficult to make it work, essentially, right? And it's most people actually just get burnt out and give up. It's not even about like your idea not working or anything like that. People want results like yesterday, right? People don't have patience to build companies for 5 to 10 years, which is what actually needed to build any real business, right? It doesn't matter how much equity funding you raise. Reality is, you only come to know if this was real or not in 5 to 10 years when your investors actually come back knocking, asking you for the, check back. Because most of them will want their money back in 7 to 10 years. And when you can't, that's when you're in deep shit, right? Because, all hell breaks loose at that point in time. But, fundamentally, I don't think it matters at all because, at least what I've noticed, right, when it comes to entrepreneurship is a lot of people get into this for the wrong reasons, right? People get into this in hype zones, right? I'll give you an example. Like in 2020, so much equity funding was going on that every Tom, Dick and Harry wanted to become, an entrepreneur because, raising $1 million, $2 million was everybody was making, getting crazy valuations, getting these checks on just presentations, things like that, right? But now, like literally now, right, like where funding is completely dried up, I know so many companies which have shut down. I know so many founders which have, quit and started doing jobs again.
True.
I think, ultimately the beautiful thing about, competitive marketplace, right? And, capitalism is that all of this stuff kind of gets weeded out, right? Like, so I don't think it really kind of matters. I just tell people like, personally, my advice about entrepreneurship is, do it when you have an idea which you really believe that, you're going to stick by this in the worst of days, because ultimately that's what it is, right? 8 out of 10 days, especially in early days of starting up, are terrible. Like, you'll feel like
Yeah.
really, it's only 2 days that you'll feel like, good about yourself, because there'll be some small win. Cherish those small wins, but no, at the same point in time, most of the times it's a crappy day and you make very, 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 very little money for 10x the amount of work that you would have to do inside a job. But eventually, if you've gotten it for the right reasons, you have a good team, you have a great, partner, right? Which is very important, essentially, to get right. Once you do all of these things, then you have to be, consistent, patient, and know at the same point in time to take care of your mental health, because again, it's a marathon, not a sprint. You can't build a company in a couple of years, 3 years time, no matter how hard you work. You will have to work like this crazily for 5 to 10 years, then you'll have something real. So yeah, you just have to keep all of these things in mind.
Yeah, I mean, instant gratification has become the need of the hour for so many, and a lot of us need to understand that it's not that everywhere you can leverage that instant gratification. It's not Instagram everywhere, right? But having talked about the Indian entrepreneurship ecosystem and everything, what's one thing that you think should change in India within the startup ecosystem, and what's one thing that you see it changing right now, but you wish it doesn't happen? So,
Yeah. So I think one thing which I probably really wish happened and it's not happened is, I really hope, I really wish people, understood the economics of VC funding, before they took VC funding, right? Uh, like, I think this is the biggest gap I've found with entrepreneurs, who like chase really high valuations, chase, VC money, but most of the time, I don't think they really, need VC money, or they understand what are the terms and conditions which come with that money. Uh, you know, the way it's celebrated, it's like somebody celebrating a home loan. That's how I think. So, only, probably home loan is better. I think, this one at least comes, home loan is like cheaper. This one is
yeah.
coming at a crazy interest rate. So I think, like just economics behind, how to do a startup, right? To actually make money yourself, right? Sometimes I feel really sad because I see really promising entrepreneurs raise money and basically kind of like ruin many good years of their life and end up making very little money, or no money, frankly, because they end up getting screwed with their investors, right? And I wouldn't say even screwed, because ultimately they didn't understand the economics themselves, so it's on them, right?
Yeah.
But that's the biggest thing I wish, changes in the country, because it's sad to see, very smart entrepreneurs working their butt off, but ultimately walking away with nothing. That's
Yeah.
what really pains me quite a lot. So I think that's point number one. I think point number two, what I hope really changes is, I wish that, people start giving a lot more ESOPs, to their team members, right?
Mm.
Um, because I think one of the things which, and this is something which even I've realized, on building companies, is that, it's all about the team. You are nothing without your team, right?
Hmm.
Basically, the best company in the world, right, is basically its team, right? If the team
Yeah.
walks away, the company is hollow. So
Mm.
not only like, you should be giving out, ESOPs to your team, but, make sure that they're of real value. Make sure that, they actually make money with this stuff. Make sure it's at right valuation. You know, it's fine to, do all of these pitches, etc., to investors. But make sure that your, team also wins, right? Economically, right? Because if they don't, they will leave, as they should. And when they leave, it'll leave your company in deep trouble, right? Because not everybody is easily replaceable, right? Some people are really amazing and you should try your best to retain them and retain them in the right way, right? Which is basically giving them, stocks inside the company, which makes sure that their vision and their incentives are aligned with yours and the investors, right? So that's the second thing I would basically say.
Great, perfect. The concluding question would be with respect to the lending space, of course, and that you all are into. Okay, so there are a lot of different types of lending that's there in this particular space. What is your personal favorite out of all these, and that one that's dear to you?
Well, I'm a huge believer, I think, in embedded lending, right? So the way I would basically, describe embedded lending is that, let's take an example, right? A marketplace like somebody like a Zomato, right? If, at any point in time they decide to start lending to their restaurants, right? To their best restaurants, they know which restaurants are actually getting the most traction. They have the data that, this restaurant is working really well in Bandra. Maybe it'll do really well in maybe, Andheri as well, right? Like they have all of this data. So I think they have the ability to come in, fund these restaurants, help them scale up, obviously get them more orders by positioning them on their app in a favorable manner. In addition, if they go one step backwards, right, which is not only, provide capital for these restaurants to scale up, but actually provide the raw material as well by acquiring it at scale, which is, all the vegetables that they need to cook food, the space, the equipment, all this stuff, right? Imagine they bought this for like 1,000 restaurants together. It would be so much cheaper and everybody would again end up winning. So to me, like this is the best, I would say, avenue of financing, because ultimately you're lending to your best customers. Point number one. Point number two is you control the cash flow, right? Because customers pay you, you pay the restaurant, and you can directly deduct your money or EMIs through this kind of cash flow, right? So to me, this is, I would say, like my number one favorite use case, right? Because I think it's very powerful. And personally, if I was betting, I would say like over the next 10 years, this is going to be like a monster use case, not only in India, but across the world.
Got it. Perfect. Thanks, Mikhil, for having such an interesting and insightful conversation. I'll just sum it up with our signature rapid fire round, 5 words and rapid answers. So my first word would be financial inclusion.
I love it.
UPI.
Inspirational.
Digital lending.
Future.
Apollo Finvest.
Personal.
Okay. And the last one would be Mikhil.
Hoping to be always a better version of myself.
Perfect. Great. Thank you so much, Mikhil, again for coming on the show. I'm absolutely honored to have this done with you. Thank you so much.
Thank you. Pleasure.